There are two reasons why you will lose money in the next, three reasons why you'll lose money in the coming months. Number one, the AI narrative. The AI narrative has been rampant since November of 23, when ChatGPT launched. Money started flowing into NVIDIA, Mag 7 stocks. Mag 7 stocks represent 36 to 50% on any given day of the price movement of the equity market, of S&P 500. 63% of stocks in the S&P 500 on Monday's close were down by an average of 1.5%. Yet, those 7 stocks drove the S&P higher. That's a narrative. That's a narrative-driven market. And that narrative is starting to crack. It's starting to fade. Palantir CEO came out and said, these are the best earnings ever for a software company. Well, if that isn't an indication of a top, nothing is. That similar situation, or saying, or something of that sort, was said in 1929, 2 weeks before the 1929 crash. It's always this over-exuberance, this concentration into one sector that eventually blows up. .com, for those who remember that. Housing, for those who remember that. Housing for sale. Come on. There are more homes in my area where I live for sale than there have been in years. Why? Because of number two, liquidity. The stock market, the equity market, the consumer is driven by liquidity. Let's look at the gold trade. Gold skyrockets higher over 3-4 month period of time. Gold is a risk-off trade. That is where when shit hits the fan, things get bad, you go to gold. You go to US Treasuries. You go to those kind of things. And gold in particular has had a hell of a run for the last 3 months. Yet it ended. Yet it's pulled back. Why? Because of liquidity. Liquidity, the amount of money in the system. I have a good friend who is in the financial industry, works on the mutual fund side, and he is saying liquidity is no longer available. It's drying up. Consumer is asking for money back to pay their bills, to pay their mortgage, because they're losing their jobs. Well, those 48,000 UPS workers who are getting laid off, those IBM workers who are getting laid off, what is the 1-2 things they're going to experience really quickly after severance packages? A lack of liquidity. No more direct deposits into their checking account. No more contributions to their 401k plans. Look at the number of layoffs we have seen in the month of October. Let's particularly look at the layoffs in our government. Not layoffs. You're just not getting paid because we can't agree on a deal because I don't like you and you don't like me. So 48 million people, probably more, and then the people who are affected by those 48 million people aren't getting paid. That means that money, tax money, that revenue the United Treasury gets, it's just piling up in their TGA account, the Treasury General Account. It's alike. They haven't written a check to pay those employees, to pay those contract workers, to pay their bills, so people aren't getting paid. Those people, if you get on a plane today, just know the air traffic controller person who's directing your pilot isn't getting paid. At what point does he go, fuck it, and walk out the door? And you're in the air. Concerned? Maybe a little. This is about liquidity. And when you don't have liquidity in a market, you see it to pull back. Amazon. One of the guys on our call calls me, you're so negative, you're so this. I'm not negative. I'm a fucking realist. What I know is when you don't have money in your checking account, stocks don't go up because you don't contribute to your 401k. You don't contribute to your brokerage account or IRA. You don't buy stocks. You buy the necessities when your money gets tight. You pay your mortgage. You try to pay your credit cards, which credit cards delinquencies are all-time highs because people don't have the money to pay them. That movement in liquidity needs to be your number one risk management, number one gauge of how this market's going to do well. Why has it done well, Trent, over the last 5 years? I mean, it's been banner because between 2020 and 2022, $10 trillion was injected into the system. That isn't including the creation of credit on top of that 10 trillion that is now exponentially put margin levels at all-time highs, meaning you went out and took $100 and took margin on it and bought $200 worth of stock with it. Guess when they did that in a big way last time? 1929. I don't mean to be doomsday, but this is the reality. Today it's sunny. I can dress for the weather. Tomorrow it may be raining. I'll dress for the weather. If I can see the forecast and little indications, there's no clouds in the sky. Chances are it's not going to rain today. So I can dress appropriately. And tomorrow, if the clouds are not here in the afternoon, chances are I can dress the same way, in a nice way. It's the same way with the stock market. And liquidity needs to be your number one factor. When banks, 40 of them, have the access to the Federal Reserve overnight window to pledge securities, treasuries, or CMOs to borrow money so they can meet their overnight obligations. When they're doing that at a $50 billion clip on Friday, $14 billion clip on Monday, and then yesterday, $4 billion clip, but they've been doing it periodically over the last month, it means they don't have enough liquidity. And when you shut the government down for a month, we're now on day 37? That means 48 million people aren't getting paid. Now your senators and congressmen, they're getting paid. That's why we vote for them, right? This will, if this continues, this liquidity dry up continues, my projection of the S&P 500 getting to 7,000, well, I may have to retract that. And sadly, because if it goes to 7,000, that means people who have money in 401ks get closer to their dreams. But the thing you need to be thinking about right now is having those dreams delayed. And when you look at liquidity and you look at the AI narrative, the two things that have driven this market higher since April, it's drying up, which means maybe you should lock in some profits. I've heard people say, I've been in Iren, I-R-E-N, since the low $10. I'm up 600%. It's going higher. Guess what I heard from my neighbor in 2008? My business is great. There's no problem, Trent. Guess what in 2009 he did? He sold everything. He lost his business, sold all of his Porsches, his Ducatis, and guess where he moved to? His mother and father-in-law's home. When shit gets this frothy and you think the world is rosy and you're up 300, 400, 600% in a fucking stock, that eventually will become zero. So preserve your capital. Just put it on the sidelines. And if I'm wrong and the market goes higher for the next 4 years, you can always buy back in because there will be a dip and you'll have an opportunity to buy it. Crypto is a prime example. I heard one of the craziest things on our Discord yesterday, and that was Ethereum is going 7,000. Pulling back a little bit, it's going 7,000. Well, when there's no liquidity and it's pulling out of Bitcoin, it's gonna pull out Ethereum and Solana and all these others. Ethereum 1,600 looks like a good buying opportunity. Liquidity, that's what drives markets. Get smart, join the bus, Best of US Investors. Click the link in the profile, do our 14-day trial, but whatever you do, preserve capital.